You've probably heard in the news that Obamacare prices, ACA prices went up probably 10 or 15% this year. Small employer went up 20 to 24%. If they are only looking at Advantage plans or they're only looking at supplement plans because all their friends have it, and there's a little bit of...
That's what my clients do too. They talk to their friends and that's what they go with because they don't know any better.
Somebody called and said, I can take care of your financial advising for you. Just sign this paper. So he did a bunch of financial advising, but somewhere in that paper was, I'm going to change your healthcare plan. He switched him to another carrier. His doctor's not a network. He couldn't get his surgery. Everything fell apart.
Hi, everyone. Welcome to the Chimes Dimes podcast, brought to you by First Wealth and Trust here in Winter Garden. I'm Pete Baksh, the Chief Investment Officer here at First Wealth and Trust. And I'm really happy to be joining you here first I've got Gina Masterson of Masterful Solutions and Alice Taft, who's a trust officer with First Wealth and Trust. So first, let's give a thanks out to the Winter Garden Heritage Foundation for letting us use this awesome space to film it. The Winter Garden Heritage Foundation has a mission to preserve and celebrate the rich history of the West Orange community while fostering innovative cultural experiences, and the aim is to connect this community with its past while inspiring future generations to shape a vibrant and culturally rich future. In this episode, we're going to be talking about all things health insurance related and how to navigate Medicare. So with that, Gina, maybe a few words by way of introduction.
Hi, I'm Gina Masterson. As you mentioned, my company's called Masterful Solutions. My husband and I are independent brokers based here in Winter Garden. And so a lot of ties to the area. Love helping our neighbors and love living here for sure.
Alice, maybe a few words about you biographically, and then we'll jump right in.
Yeah, I'm a trust officer for First Wealth and Trust, and I'm a certified trust and fiduciary advisor and accredited estate planner. With that being said, I have a lot of clients where we're working on their estate plan and have, a lot of questions about Medicare. And I'm like, Gina needs to be on this show to help us navigate that system.
So I suppose let's dive in.
Okay.
And let's talk about Masterful Solutions first. So what inspired you to start this business, and what's the business about?
So actually, my husband Roger started before I joined. So I had 28 years with the Disney company, and then a thing called COVID happened. And while we were all on furlough and things, I went and got my license so I could help him. And then kind of got the bug in trying to, the excitement of starting our own business and helping people. We do a lot of under 65. We do a lot of Medicare. A lot of people have a lot of questions. There's a ton of information out there. So I always like being challenged and learning all the time. And this business is that. It changes every year, changes several times a year. So really interesting, fun business to be in, and just kind of grew from there.
We're going to talk a lot about a lot of different things here, but one of the notes that I had in my prep materials is, am I correct that people do not get charged for your services?
That is 100% true.
Yeah, is that surprising?
It is free. I think it surprises people. We're like a travel agent. So what happens is whatever you purchase from us, the insurance companies pay us from their profit, essentially. So the price that they set with the state of Florida is the price. So you can go Google it and you'll get the same price as I can provide you, as the next broker can provide you, et cetera. It's just how the insurance company works, or the insurance business works. So the price that you pay is the price you pay. So we like to tell people you're paying for one anyway, so you might as well use one.
Yeah.
Right.
And to sit down with someone and talk about it, that's huge. Because I know huge. When I'm Googling things, I'm like, this and this and that and whatever, and then you have to put it all together, and so having a face-to-face conversation about it is so very helpful.
Yeah, and we typically do like an introductory discussion, get some information from people, and then we go look for several different products. We never just send you down one pathway. Sure. There's usually a couple of choices you can make. There's a financial choice, of course, and then there is, are your doctor is going to be in network, covering my drugs, things like that. And then it takes 2 or 3 appointments before the client feels comfortable choosing what they choose. And then we feel good about putting them in a plan they can use, which is the most important.
Sure. The benefits of working with a broker, you've already really kind of touched on this, versus going it alone. Was there anything you would add to what you just said? Because you just mentioned you can go out there and Google it and,
Spend a lot of time on it, and it changes all the time. So we take classes about, the government has classes every week. Carriers have classes about every week, just to touch in, changing products, things coming down the line. The government of late, for sure, has had classes every week just to kind of keep brokers in the loop about changes in the law and upcoming things, about this upcoming open enrollment. We just got done with an open enrollment. So, you can spend a lot of time on it if you feel like it. You can also end up on a lot of lists.
Oh.
And we only know that because we used to buy lists when we first started out, and they're from Google searches.
So I Google search and I'm on a list.
Yes, and you've given me permission to call you because of that, just so you know. It's
Really?
the state regulations that if you're out there looking, you've given permission for someone to call you.
Wow.
Is that a new regulation or?
No, but you can only call a certain amount of times a day, things like that. So Florida does put some boundaries on it.
Yeah.
We've been out of that for so long now. We're just all referral now.
That's just interesting to me. I know there was the big thing about do not call lists back in the
There are
old
do not
days,
call
and-
lists, but you went out and looked. Yeah.
Yeah, look at that.
That's how the list makers get around it. I'm not sure if it's 100% legal. I can just tell you that's what they told us.
So, we're talking about kind of the complexities of the health insurance marketplace and how things are changing and everything. And in terms of, let's say you're a small employer and you're interested in providing that to your employees, is that a good idea in the state of Florida? Is there a great way to do that or an okay way to do that?
You can certainly do it. What I would advise, though, is when you're under 50 employees, let's just take it down from that. If you're under 20 employees, the benefit's just not really there. You're going to have somebody on your team, first of all, administer the plan. Let's say you come work for the business, but then you leave and somebody else comes in. So somebody has to take care of you and your dependents and getting them on a census and bringing that to the health insurance company and having them requote. When you quote a group under 10 people, everybody's being quoted individually. So somebody my age is going to pay 2 to 3 times as much as somebody in their 20s. It's not necessarily a benefit for that employee to have that benefit. And when they're smaller employers, under 50, yes, you've probably heard in the news that Obamacare prices, ACA prices went up probably 10 or 15% this year. Small employer went up 20 to 24%. So it really is hard for that small employer to kind of keep track of all that. And then the prices go up and now you have to shop. And so you can do it. There are some good group providers, but what I would recommend is a product called a QShare or an ICRA. Just like, they just love their acronyms. So QShare is a qualified small employer health reimbursement account.
Oh.
And ICRA is an individual something health reimbursement account. Anyway, it's you as an employer set up, let's just say a stipend of $500 a month. I'm going to give you towards purchasing your insurance for your family. And then everybody either gets the same amount or depending on the product you choose, you can do more for more senior people. Maybe you give them $1,000 a month, but then they go find their own insurance. In a community like ours, it makes sense because a lot of your spouses are working at Disney or Universal or Lockheed. And so they have corporate insurance. So they don't really want that smaller employer insurance. They would like to choose their own. So that's a product that, and the government's quite frankly pushing both of those products quite a bit in all of our trainings. Don't forget about the ICRAs. Don't forget about the QShares. I think they knew because the prices went up and the subsidies stopped for anybody over a certain income level. So they knew it was going to be an issue this year. So they've really been pushing the training on that.
Yeah. Thank you. That's good information. As we're talking about healthcare plans in general and you're the consumer, what are the most important considerations in that regard?
That your doctors are in network. So a lot of times, especially if you're coming off a big employer plan, let's just say you worked for Disney for years and you had maybe one of their open non-HMO plans, you're used to going wherever you feel like going. But that's not how it works when you're in the individual market. You really do have to figure out your doctors and which ones that they've made a contract with. And then that's what we provide to our clients as we go through and we evaluate doctors. I just did this morning an analysis for somebody who had for their family 10 different doctors. And there was one plan that had most of them except for 2. So now we have to have the conversation about those 2 doctors. And do we spin you into your own plan or will those doctors take cash? So there's a whole bunch of different things you have to look at. That's the number one important is, the doctors. We also coach people through maximum out of pocket. So a lot of times when you're on a large employer plan, your maximum out of pocket for your family that you could spend in a year might be $5,000 or $6,000. Well, when you're on the Affordable Care Act plans, the maximum out of pocket start at $10,000 and they double, for a family, it's $20,000. So
It's a lot.
it's a lot.
Yeah.
It's a lot, but you're also stopping your risk at 20,000, so it's just a little different this year in how we're counseling people to choose a plan that you can afford, that at least caps your out-of-pocket costs.
Yeah, important consideration for sure. You know, from your perspective, are you seeing that people are having a hard time with this, you know, among the clients?
My client base, yes, because they're older usually, and then they're gonna have to figure out what Medicare plan they need, A, B, C, D, F, G, whatever, you know, and how do you know, what's what? So they really need the assistance to get them through that process.
Yeah, if you want to talk about Medicare, we certainly could clutch to that if you want to.
We're going to be moving right into it.
Okay.
In fact, you're jumping right to where I want to go next. So first of all, let's start with the most basic question, which is what is Medicare?
So Medicare is the health insurance offered to those over 65 in the United States. So everybody gets Medicare. There's 4 parts to it. Part A is hospitalization. That's your ability to go to a hospital. Okay, everybody gets that who's for zero premium if you've worked in the United States for 10 years or more. There's a certain amount of months that are in there, but in general, 10 years. Most people get that for free. Part B is your ability to see a doctor. Okay, so it's also those medications given in a doctor's office, like chemotherapy. So Part A, hospitalization. Part B, your ability to see a doctor. And you pay for Part B. Everybody pays for Part B, unless you're on Medicaid. It's a whole different conversation.
Gotcha.
So low income or those in nursing homes, et cetera, they're not paying for Part B. Part B this year is a little bit over $200 a month for Part B. If you make a lot of money, you could be paying a lot more for that. But that's you're paying to the government.
So can I stop you right there and say what you just said is a little bit I'd like to clarify, and that is, you know, you start out, say, somewhere around 200, and then it escalates depending on what you're making. How aggressive is that? So is it like a penalty to having a larger income in retirement per se, or
2 years prior to retirement, you should consult with an accountant.
okay?
So I'm not going to advise on how to get your income down.
I see. No, you don't have to. That's
Right.
You know.
So I have a client who, she is 66. She's still an active real estate agent. She brings in $1 million a year. She pays over $600 a month for
wow.
that Part B. And everybody else is somewhere around 2.
I got you.
Okay.
Thank you. Yeah.
Yes. And they ask for it in quarterly. So her first bill was, $1,800. It's a little shocking. So some clients have made sure that their income 2 years before 65 is in that. It's a large range that will cover the $200 a month, but you do pay for Part B, and everybody pays for it.
Fair
no
enough.
matter what we talk about today, Part B costs something.
Okay.
Okay, because we're going to get into zero premiums in a second.
Oh, all right.
That's different. Part C, so A, B, C, and D. Part C is where they put Advantage plans. Okay, we're going to come back to that.
Okay.
Just want you to know that that's.
So that exists.
And then Part D means drugs. That's easy because it is drugs. So you need to have B and D where you can pay a penalty. Drug plan, if you are that client who's making $1 million a year, you will pay the government for it. But most people do not pay the government for D.
Okay.
They will pay insurance company for D.
Okay.
Okay? There's a lot there.
So that's great. And so coming back to C,
Okay.
let's hear a little bit more elaboration there.
So when people are turning 65, they have 2 options. One is you can get an Advantage plan, which is Part C. Advantage plans run just like an employer plan. So when I worked at Disney, I couldn't go to the Mayo Clinic in Minnesota, and I couldn't go to the Cleveland Clinic in Ohio. They're not a network. Okay? They have a network. It's usually nationwide, but your network is limited to whichever, hospitals are in network with them. So I did have a client who was very nervous. She got diagnosed with something. She was already on an Advantage plan. She had heard all the things in the news about how horrible they were and how she was going to be denied care and everything. And I counseled her through, what do you have? Found that Cleveland Clinic in Florida is in network with her Advantage plan. They have a rheumatology department that she was interested in going to. She just didn't even know to even start to look. So I was like, your plan is fine. You don't need to change. Stay with your plan, and you can see the Cleveland Clinic in Florida. You can't see the Cleveland Clinic in Ohio.
Right.
They're not a network. They won't take Advantage plans. So some people don't like that. A lot of people are okay with, Orlando Health has a lot of great cancer centers, a lot of great centers they just built a whole, gosh, I don't know if it was a building or what, to do ablations for people's hearts.
Interesting.
So there's a lot of advances that you might not need the Mayo Clinic. But when you're turning 65, that's one choice. Another choice is what's called people call it a Medigap or a Medicare supplement, or they call it original Medicare, which is not true. Original Medicare is A and B in a drug plan.
Okay.
Okay. So you could just do nothing, get A and B and buy a drug plan.
Okay.
The challenge with original Medicare is the deductible in Part A resets every time you use it. And the deductible is $1,700, which might be fine if you only use it a couple times a year.
Yeah.
It might be okay. If you are going through something that can get expensive really fast, there's a lot of gaps, which is going to lead to the conversation here. Part B has a deductible, and the deductible's $285 this year. So that's not a lot. So you could pay for that, just have the deductible, and have this resetting Part A and then buy a drug plan. That is an option. We just typically don't advise people to do that because if something goes bad, you don't have anybody kind of guardrailing your costs. So that's actually option one. We always tell people you can do nothing and just get a drug plan because you will need Part D. Okay, is it confusing yet? Because Part C acts...
I can see that being confusing, but you're
is
explaining that very
Right,
well.
and I'm pausing a lot because there's a lot of... Sometimes questions come up, right? And you've heard things or you've watched things, and so you want clarification. So Part C is that Medicare Advantage plan. Acts like an employer plan. Also includes drugs. So it can get a little confusing. It's like an all-encompassing plan.
Okay.
They throw a lot of benefits and bells and whistles like dental and vision and hearing, meals. Once you get, out of the hospital, they'll bring meals. Some of them, if you're on Medicaid, you'll see these advertised on television all the time. They either give you money towards groceries but that's for a whole different division of people, right? For most people, you're not going to get money for groceries, but you do get a full service health and sometimes dental plan in an Advantage plan.
Okay.
Okay. First option, original Medicare. Second option, Advantage plan. Third option is Medigap or Medicare supplement. And that's where it gets confusing with the alphabet soup. And if you look at any of the Medicare brochures, it's plan. So we just talked about part. And my brain goes to a four-letter word that starts with P is part. So then when they said plan, it gets kind of, I get squirrely, right? So A, B, there's this whole thing. Well, not all of them are sold in Florida. And I will tell you that the ones that are sold are not notably different or more beneficial than a Plan G or a Plan N. And so we typically tell people, here's this huge chart you're going to look at, A through whatever. Just look at G and just look at N. Those are the only two that we sell because there's really no reason to sell the rest of them. They fill in the gaps. So we'll talk about G just to make it easy because Plan G is more expensive, runs about $200 a month more than you're already paying for Part B.
So 200 and then...
Plus the 200. So you could be paying $400 a month.
Yeah.
Plus a drug plan.
Still not terrible in the grand scheme of things when you look at the exchanges.
Exactly. Yeah. And it's wonderful care. And it acts differently than you're used to. So when you go into a doctor's office and you say, I have a Humana supplement plan, the person at the desk might go, we don't take Humana. You don't have a network when you're on a supplement or a Medigap plan. They bill Medicare first. So as long as the facility or the doctor has an agreement with Medicare, they will take you. Mayo Clinic in Minnesota, Cleveland Clinic in Ohio. You can go wherever you want, and your deductible is only $285. They fill in the gap of that $1,700 Part A hospitalization thing. They take care of it. The provider bills Medicare first. They get reimbursed through the insurance provider. And you as a client or as a customer, you're only paying that $285 deductible, which is a couple doctor's visits, and then everything is zero. But it is $200 a month. So if you can afford it, we typically say get a Medigap or Medicare supplement, especially when you turn 65. So it's going to get a little confusing now. So I want to make sure I covered A, B, C, and D and your three choices.
So what do you think, Alice?
So, one thing that popped in my head, you said the Advantage plan also pays for some prescriptions.
They pay for all prescriptions.
Okay,
Yes.
so do I need D then?
D is in it. So no, you
So
don't,
no. Okay.
don't need a
Got
separate
it.
drug plan. With the supplement, with option 3, Medigap and Medicare supplement, you need to purchase a separate drug plan.
Okay.
There are some with zero premium.
Yeah.
So a lot of my clients go on a zero premium plan, and so they don't see the cost.
Got it.
The zero premium plan's not for everybody. I have 2 clients that have to have it. One have to have a $120 a month drug plan, which sounds like a lot, but when you're taking some drugs for active cancer,
Yeah.
liver rejection medicine,
You're
this
running
client
the thousands.
he
Yeah.
can't live more than an hour away from Shands because his body could reject his liver. All of his drugs are $45 on this
Wow.
$120 a month plan. So it's a deal for him. If he were on the zero premium plan, he'd be paying out of pocket for the rest of those drugs.
Right.
Yeah. Well, I think we got it from here,
Yeah, I
right?
think that makes
let's hear the
sense.
next level then.
The next level, here we go. This is advanced level. When you're turning 65, you can get that option 3, that Medigap, Medicare supplement for zero. I'm sorry, strike that. You can get that without anybody looking at you, no underwriting.
Oh.
So underwriting, for those that don't know, is somebody's going to look at your health records. Let's just say that you choose a plan that needs to be medically underwritten. That means they're going to look for the last 5 years. They're going to look at the medical database. They're going to sometimes ask you for the last 5 years of medical data. And then they're going to determine whether or not they want to insure you. And if they want to insure you, they may charge you more. So underwriting is never something that we want anybody to have to go through. When you turn 65, it's a guaranteed issue. That means no underwriter is going to look at you. You get that Medigap, Medicare supplement plan. So the rub for a lot of people is, well, if I wait until I really need it, they might not take me,
Yeah.
right?
That makes sense.
So we always counsel people, if you can afford it now, I would take it now. You can always go back to an Advantage plan. There is this 1-year trial period for an Advantage plan. Let's say you turn 65 and you decide you want to save on the monthly cost. You just want to pay for your Part B premium because everyone's paying that no matter what choice I'm showing you, right? If within that first year you go, yeah, I think I made a mistake, I want to do that option 3, that Medigap, you can. There's a free look period with no underwriting.
Okay.
Anytime after that, someone's looking at your health and determining whether they'll take you.
Oh. So if you were to change after that,
Right. You can
That triggers
start on a
the-
Medigap or Medicare supplement and go back to an Advantage plan if you want to. That's not a problem. They'll take you. It's the going from an Advantage to a supplement plan. It's a hard decision for a lot of people.
yeah. So I'm going to shift gears a little bit and ask what tends to catch a new Medicare enrollee off guard?
That if they are only looking at Advantage plans or they're only looking at supplement plans because all their friends have it. So that happens a lot. I know several clients have regular breakfast with their friends and they talk about what I have is, and there's a little bit of,
That's what my clients do too. They talk to their friends, and that's what they go with because they don't know any better.
they don't.
Yeah.
There's a value to that comfort level too. Like we have so many different carriers we can offer. We don't have any that we're not offering in Central Florida. Just put it that way. We have all of them. But when we pull a Medigap or a Medicare supplement, some of them have lower prices than others. Some of them raise their prices every year more than others. We know that, but it's not publicly broadcast. I mean, so I can tell you that, yeah, this insurance company is making a play, so to speak, in this zip code because they want to pick up more people in it. I don't know that they're not going to charge you more money next year on your Medigap.
So what you're saying is they may offer lower rates in a particular area to entice new business
Yes.
and then reverse course once they hit their goal?
Yes.
Okay.
They don't tend to go over 15% per year. So just to back up again, too, you're going to have rate increases on the third option.
Yeah.
By the way, the government increases B every year. That's why I couldn't quote you the exact amount
Yeah.
you got in here because we just switched. Most of the Advantage plans, so that's option 1, the government can change that. Most of the Advantage plans are zero premium in this area. We're lucky. Some states, they charge. The Medigap, they can charge you an increase every year just for market changes. If you come in when you're 65, you don't get rate increases for age. So if you are 80 and you decide you want to go back and get a Medigap plan, they're A, going to underwrite you, and let's say you pass it, and that's fine. But B, they're going to charge you a rate as an 80-year-old. And then C, they can raise your rates for age every year, market plus age. So we always try to tell people when you're in that turning 65, it's now the time to make the choice between I'm okay with this employer plan look, or I'm going to go with this Medigap Medicare supplement and pay so that I can guarantee to be locked for age rate increases.
If we only had a crystal ball, we could figure out our health that way.
I know, isn't that great? And then some states, not to get too dorky, because you'll hear this in the news, Virginia, when you have your birthday, every year on your birthday, you can have a guaranteed issue to go into a Medigap or Medicare supplement. And everyone's like, that's awesome, thank you. What happens is because people wait until they get sick and then they come on, now the rates are really high. And so we can tell you with pretty fair confidence in this state, it's about $200 to $225 for a male in this county to get a Medigap or Medicare supplement plan. If they went to that, it would easily go up to like $600. Plus, you're paying the government. So now it's really turning into who can really afford that plan, and that's not really the intent of Medicare. And people have good intentions when they pass laws like that. They really do. They just don't know the downsides.
The law of unintended consequences.
That's what it is.
Well, thank you for that. And I guess, maybe a couple more questions, and we've gotten through a lot here. But this one's interesting, and this was on the prep sheet. And, can the cheapest plan wind up being the most expensive over the long term?
In Medicare?
Your cheapest option turns out to be more expensive as a result of things like, out-of-pocket maximums being very high, or the resetting deductible and things of that nature.
So that only happens in option one when you don't have anybody kind of gatekeeping.
Gotcha.
And when you're in an Advantage plan, most of them that are an HMO, which means that you must stay in a network. In some cases, you have to get a referral. So if you're in an HMO, their maximum out-of-pocket's $3,000 a year. And then they cover $100. That's what I'm saying. It's
so it's good. Yeah.
And if you get a PPO plan, which means you have in-network and out-of-network, you have preferred providers, PPO, preferred providers, and preferred providers. You'll pay more for the non-preferred, but even them, they'll have like a max out-of-pocket of $7,000, something like that. So I do have a lot of clients who choose an Advantage plan because they're like, why would I pay up front? I can pay $200 extra per month. I'm already going to pay the $200 to the government. I can pay $200 extra, or I can bank it and roll the dice. And God forbid something bad happens, my max out of pocket is the most important. And if it doesn't go over $7,000, I can handle it. The insurance company will cover everything else.
Yeah, by and large, that sounds pretty good.
I usually tell this story. So unfortunately, my mom died of cancer years ago, but she had what is equivalent to a plan Gino. And when Medicare is like any other insurance, they have a step therapy. So she had cancer, and they require, before you can get Keytruda, which is advertised on television and super expensive, it's $20,000 an infusion times 4 infusions, right? These expensive drugs. Chemo has to fail. So they do have step therapy in Medicare. There's also this misperception that Medicare pays for everything. They don't. So once she got to the level where they would pay for Keytruda, my brother was freaking out because he goes, she can't afford this. It's $80,000. How is it? And I go, John, it's $285. That's not possible. How is it $285? And I said, because that's her deductible, and the insurance company takes it from there. If she had a Medicare Advantage plan, and let's just say they had a $7,000 max out of pocket, it would have been $7,000, not $80,000. So that's why I'm saying I don't know that once you're in the Medicare realm, there's anything really bad anymore. Does that make sense?
Yeah, that's good to know.
Yeah.
Little peace of mind.
Under 65 is a whole different thing.
What's that?
Under 65, a whole different thing.
I guess the last question, and this is going to be, well, I have two. One of them is, you hear about Medicare scams. Are there any that are prevalent in the community that you know about, or that you would advise people on to be wary of?
Yeah. Pick a large Medicare provider. This happens with any bank too, by the way, right? Hey, I'm from Chase Bank. Right. That's a big one, right? Oh, I don't have Chase. Okay, thank you. They go to the next person. Hey, I'm from United Healthcare, and I'm calling because I think there's a better plan that you could be signed up for. Oh, there is? Oh, my broker didn't tell me about that plan. Yeah, there is. And they get you signed up for something that doesn't work for you, your doctors don't take, what that happens. And in fact, I was just crafting a scam email for our Medicare clients now, but now it's starting to happen in the under 65. So my husband had a client who had a surgery pending, and this client had Oscoplan, which is one of the better carriers in this area. Somebody called and said, I can take care of your financial advising for you. Just sign this paper. So he did a bunch of financial advising, but somewhere in that paper was, I'm going to change your healthcare plan. He switched him to another carrier. His doctor's not a network. He couldn't get his surgery. Everything fell apart. He didn't know. So then Roger was on the line with healthcare.gov with this client for 3 hours as they were going through different supervisors to try to figure out how to reverse a plan. It's not open enrollment. That change got made. The client didn't know. He didn't pay attention. But it does happen a lot in the over 65 realm where people say, it's open enrollment. We can get you something better. It's always a good idea to just, if you have a trusted broker, call us back. I can call my rep and say, are you guys actively calling? 99% of the time, United Healthcare will say, we're not actively calling.
Okay.
Who is calling? I don't know. But that scam happens a lot.
Scary stuff.
Yes.
Yeah, and the government put some guardrails around it. Like, they had a lot of ads in the past. And, there were famous celebrities who would say, call this number for these Medicare plans. But they were only going to show you one plan. Okay? They're not going to do the analysis to find out if your doctors are in network. And they used to entice you by saying, yeah, we're going to give you free groceries. And so people would say, well, to heck with what I have. I want the free groceries.
Yes.
Well, then when they call, they find out you have to be on Medicaid. And just to be clear, it's not a lot of free groceries. It's like $30 every 3 months. So it's a nice spiel, but people would fall for that, and then they'd get stuck in this loop because these people were A, either claiming to be from Medicare, or B, telling you that they were out helping you.
Wow.
So you have to be careful. But now they put some guardrails on the advertisements that they can't, they have to say it's for Medicaid. And I've watched, and they're better. The celebrity appearances are less. It's a pro football player.
I recall.
Much less this year. Well, we have to spiel things. Like if you called me, I would say, we don't represent every Medicare plan in our area, but that spiel is kind of funny because we do. But we have to say it to you. We represent every Medicare plan in your area. You can also go to Medicare.gov to get but I would always tell people, go to Medicare.gov or healthcare.gov. If you really feel compelled to Google something, go there. Those are safe and they have the right information.
Well, thank you. That's good information. And I don't know if there's anything maybe either of you think that we've missed and we need to bring up before we close, but
I think we covered a lot of ground today.
I think we did.
Well, in that case, thank you both for being on the podcast. And to all of you out there, thank you for watching. This is sensitive stuff. When we're talking about financial advice, investments, we're talking about health insurance planning and all of these things, estate planning. A general show like this cannot be construed as individualized advice. Call your professionals, your insurance professionals, your trust professionals, your investment professionals. Call us at First Wealth and Trust. We love to talk about this stuff. Again, thanks for joining us. And if you like this, subscribe, hit that like button. And we look forward to seeing you on the next episode.